What if I told you that 3 stocks under $100 could be the key to doubling your portfolio's potential in the next few years? Bold claim? Absolutely, but hear me out. These aren't just cheap stocks. They're hidden gems in industries poised for massive growth.
I found the treasure! I found the treasure!
And the best part? You don't need $1 billion to get in early. Finding solid growth stocks under $100 a share can feel like a treasure hunt these days. With so many higher-priced options dominating the headlines, you might think a hefty price tag is a requirement for success. But here's the thing. There are still plenty of affordable growth stocks worth considering. The key is knowing where to look and understanding why these budget-friendly options might be a smart addition to your portfolio. Why focus on stocks under $100? For starters, these lower-priced investments can stretch your dollars further, allowing you to diversify across more opportunities. Plus, buying in during a company's earlier growth stages can yield significant returns over time. Of course, with lower-priced stocks, you'll want to prepare for a bit more volatility. But remember, every great investment comes with a calculated risk, right? So, if you're ready to explore some intriguing growth stocks under $100, we've got 3 that should be on your radar. Let's dive into what makes each of these companies stand out and why they could be a solid addition to your portfolio.
Knowledge.
First up is Crispr Therapeutics, ticker CRSP.
Interesting.
A cutting-edge player in the biotech space. Trading at just over $51 per share recently, it's well within the range for budget-conscious investors. Now, you might wonder, what's the buzz about this company? Crispr specializes in gene editing, leveraging groundbreaking technology to treat genetic disorders. Sounds futuristic, doesn't it? The game changer for Crispr is its recently approved therapy, Casgevy, developed in partnership with Vertex Pharmaceuticals. This treatment targets 2 severe blood disorders, sickle cell disease and beta thalassemia, and comes with a price tag north of $2 million. Yes, you heard that right. While that might seem steep, it reflects the life-changing impact this therapy can have on patients. And here's the kicker. Crispr takes home 41% of the profits, with Vertex claiming the rest. This partnership has the potential to significantly transform Crispr's financials as Casgevy gains traction. Why does this matter to investors? Approved products in the biotech sector can dramatically reduce investment risk, setting Crispr apart from smaller companies that are still in the experimental phase. It's a turning point, going from a promising idea to a revenue-generating enterprise. But Crispr isn't just about its one product. The company is also a pioneer in developing cutting-edge gene editing tools using CRISPR-Cas9 technology. This revolutionary approach has the potential to treat not only rare diseases, but also more widespread conditions like certain types of cancer. Imagine the ripple effect this could have across healthcare and other industries. Looking at the bigger picture, the gene editing market is projected to grow at a compound annual growth rate, CAGR, of nearly 18% over the next decade. Crispr Therapeutics' first-mover advantage and extensive intellectual property portfolio position it well to dominate this space. And as the demand for innovative treatments grows, Crispr is expected to remain a leader in shaping the future of medicine. Still, no investment is without risk. The biotech industry is known for its volatility, with regulatory challenges and competition from other companies, such as Adidas Medicine and Intellia Therapeutics. Yet Crispr's ability to achieve regulatory approval and bring a product to market sets it apart as a safer bet compared to smaller biotech firms that are still in the experimental stage. But before we proceed, here's a question. If you could bet on one industry to disrupt the market in the next 10 years, which would it be? Comment your thoughts below. Next, let's talk energy drinks. Ever heard of Celsius Holdings? Ticker CELH. This fast-growing beverage company has been making waves in the health and wellness market. Its stock, once flirting with the $100 mark, has since dropped to under $30. For long-term investors, This could be the perfect entry point. But what makes Celsius a standout in a crowded market? One word.
Single word.
PepsiCo. As a key distributor and investor, PepsiCo's $550 million investment in Celsius back in 2022 was a major vote of confidence. Think about it. When a global giant like PepsiCo sees potential, it's worth paying attention. The partnership not only enhances Celsius' reach, but also solidifies its credibility in the competitive energy drink space. Celsius isn't just riding on its PepsiCo partnership. Its products are designed to align with modern consumer preferences. The brand's focus on fitness enthusiasts and health-conscious individuals sets it apart from traditional sugary energy drinks. Packed with natural ingredients and free of artificial preservatives, Celsius has carved out a niche in the growing functional beverage market, which is projected to expand by over 7% annually. But here's the catch. Competition in the energy drink space is fierce. Industry heavyweights like Red Bull and Monster Beverage have a significant market share. Despite this, Celsius has an edge. Its unique brand identity and focus on wellness make it a go-to choice for a younger, health-conscious demographic. Celsius has also embraced digital marketing strategies to engage with its target audience. From leveraging TikTok trends to Instagram influencers, the company has successfully built a loyal following. This strategic branding has translated into growth, with Celsius posting operating profits in 3 of its past 4 quarters. The question for investors is whether Celsius can sustain its growth trajectory. With untapped markets and increasing global demand for healthier alternatives, the potential for long-term success is significant. Rounding out our list is KB Home ticker KBH, a leading name in the U.S. home building industry. Trading at just under $80 per share, this stock offers a blend of growth potential and value. And here's why it's gaining momentum. Interest rates are starting to decline, sparking optimism in the housing market. As one of the country's top home builders, KB Home is well positioned to benefit from improving market conditions. In its most recent quarter, the company reported $1.8 billion in revenue, a 10% increase from the previous year. What's driving this growth? A strengthening demand for housing as buyers return to the market with lower borrowing costs. And the company's focus on offering customizable homes has been a significant draw for buyers, particularly millennials entering the housing market. By allowing customers to personalize features like layouts and materials, KB Home has positioned itself as a consumer-centric builder. However, the housing market isn't without its risks. Rising material costs, supply chain disruptions, and potential economic slowdowns can impact margins. Still, KB Home's relatively low valuation, trading at just 11 times its trailing earnings, makes it an attractive option for investors looking for a balance of growth and stability. Do you think investing in real estate-backed stocks is a sound strategy for the future? The table provides an overview of essential metrics for Crispr Therapeutics, Celsius, and KB Home, revealing why they stand out as promising growth stocks under $100. Starting with Crispr Therapeutics, its current price of $52.33 sits within a stable days range of $49.75 to $52.39, reflecting steady trading activity. Over the past year, its 52-week range spans $43.42 to $52.39, suggesting consistent performance in the face of biotech volatility. With a market cap of $4 billion and a gross margin of 26.23%, Crispr demonstrates efficiency and financial discipline as it transitions from development to commercialization. Moving to Celsius Holdings commands attention with its current price of $28.17 and a robust market cap of $7 billion. Its days range of $27.80 to $30.47 shows moderate price movement, while its impressive 52-week range of $25.23 to $99.62 highlights significant investor interest and growth potential over the past year. Most notably, Celsius boasts a gross margin of 49.15%, a standout figure that underscores the company's profitability and ability to capitalize on its health-focused branding. The stock's trading volume of over 11 million shares, compared to an average of 8.3 million, reveals heightened market activity, likely driven by investor confidence in its long-term growth. Lastly, KB Home, priced at $78.53, showcases its strength as a leader in the U.S. housing market. Its market cap of $6 billion reflects its solid position in the sector, while its 52-week range of $54.94 to $89.70 demonstrates steady growth, even in a challenging real estate market. The day's range of $77.72 to $80.36 indicates consistent trading activity. With a gross margin of 21.34%, KB Home balances profitability with competitive pricing, making it a resilient choice for investors seeking exposure to the housing sector. Together, these metrics paint a compelling picture of three diverse growth stocks. Crispr Therapeutics leads in innovation with strong operational efficiency. Celsius excels in the booming health and wellness market with unmatched profitability, and KB Home maintains stability and growth in the housing market. Which one aligns best with your portfolio strategy? Now that we've covered these three intriguing stocks, the question is, which one catches your eye? Will it be the innovative potential of Crispr Therapeutics, the strong partnerships fueling Celsius growth, or the market-driven appeal of KB Home? And before we wrap up, here's one last question. What's your strategy for finding hidden gems in the stock market? Drop your thoughts in the comments. We'd love to hear your take. Before you go, don't forget to like this video and subscribe to Simple Investing Secrets for more insights on stocks, financial tools, and strategies to grow your net worth. And remember, this video is for informational purposes only. It's not financial advice. Always do your research or consult a financial advisor before making investment decisions.